Right. Evening, everyone. So the market just closed Thursday, September 15th. SPY closed red. Now, I did a video intraday for once. We sort of witnessed the flush happening. So this is not too surprising anymore to those that regularly watch my videos. But anyway, let's recap. Today, I'll cover large caps for once. I do have my eye on some of them, although more importantly is the general trend of the markets, the general markets. I mean, the SPY and the NASDAQ go down, as I think they will, down to looking at the SPY low 370s. What's the point in buying anything unless you really do believe in it and you want to start a position or add to an existing position? So I mean, we're going to look at some of these large caps, but you know, my general thesis, I have to start with the SPY and the NASDAQ. I don't want to cover all my calls, pretty accurate so far. Here we've got the ascending support. We've touched it, we're going to flush it, in my opinion. I mean, that's the SPY, the NASDAQ. Even weaker. Look at that, we closed below or just about at the low of day on the 6th of September, also below this ascending support. The Dow was, I mean, look, when you got the SPY and the NASDAQ down over 1% and the Dow's only down 0.5%, that's pretty impressive. But look where we are. You know, we're still underperforming overall. We're sort of closed lower than any other candle before. I mean, it's the same for all of them. The Russell, though, actually, it's still a bit more resilient, but give it 1 or 2 days, it'll be all the way down here, and then it won't take long until it's all the way down there. And who knows, it could actually lead the way down. But at the moment, it's the NASDAQ, I would say, that's leading the way down, which has been the general trend anyway. So markets at their absolute lows, below the ascending support, closing below the September 6th, and looking like they will take any excuse to go lower, back to these sort of July lows and eventually the June lows. So with that said, well, let's look at the VIX very quickly, sort of sideways action. It did turn green finally. Look at yields. One thing I noticed about the yields was the 1 year did actually venture above 4%. The 2 year is following suit. Pretty strong today. 5 year also pretty strong. Closed above the June 15th high. 10 year, everyone's watching the 10 year. It's the real Fed rate. I mean, look at this. We take out 3.5 and that's it. 30 year already sort of did it, but we're still going sideways at the high of the June high. Now, one thing I forgot to cover in several videos, I keep forgetting it, but is the European 10 year. So let's look at the German 10 year, the Bund. So, you know, looking exactly like the US. Compare those two. Once the US 10 year takes out 3.5, I think the 10 year, the Bund will sort of be testing its own high, and once it takes out 2%, then you know, Europe will react accordingly. The DAX will be flushing. The US markets will also be flushing at that point. But look at the Italian 10 years, same thing. So keep an eye on these key markets. The Italian with their debt, the German being the main engine of Europe. So I keep an eye on these two. I just forgot to cover them. I won't be covering commodities. I did that in my prior video. So I'm really just going to be looking at large caps. So let's move on down to the large caps. Everything else is really resource based, my main focus. Now, ignore these two down here, AMC and BBBY. They're just sort of day trade potentials. In no particular order, these from bottom up are the ones I used to look at. And it's been a while. It's been about 1 or 2 weeks since I've really looked at some of these for a swing trade, because I thought the market was going to go down. And if you look at my last videos, I really did call the drop. So for that reason, I didn't enter any of these. My last trade was PayPal, and I think I was out. My last large cap trade was PayPal on this breakout, the downtrend. I was out at 88. I think it was just here, just below the last high there. You know, didn't want to get too greedy. It was based on technicals. Everything always is. Then there was news. I didn't want to play the news. It's always risky. Or maybe I didn't know that there was news and it just came out. but I wouldn't have played it anyway. It popped 100. I think pre-market was 120 if I remember. Pretty annoyed about that, but it's happened a lot in my trading career. I've just learned to not care. You know, if you make money, you make money. In the story, it's not about how much money you could have won, you know. But anyway, you know, it's been acting sideways. So actually, it's been hovering above my sell for a while. But, and for that reason, I also don't want to go into it, which is the wrong way to look at it. You should go into something regardless of where you sold it or bought it. You know, if it's a buy, it's a buy. Who cares about what you did and your emotional attachment? But it's not the best buy at the moment. You can see it's all the way up here. Now, on a day like today, when the markets are red pretty badly, any stock that closes green stands out. Now, I haven't really looked at these too much before doing this video. I looked a little bit, rearranged some of them, but there are no particular order. But if they're down here, they are known large caps to me, and they are credible to me, credible enough to swing trade. You know, they're not going to go bankrupt in the next, I don't know, 5 to 30 days, let's say. So Zoom, everyone knows Zoom. I used to use it for these videos. I'm actually using MS Teams right now with the new video format I'm testing out. I'll see how that looks later. But Zoom closed green. Zoom is also trading around the price it was before the March 2020 Corona, which is where it really started to make its money. So I don't think it belongs down here. It doesn't really matter what I think, but that's where it is. It made the list because of how far it's been destroyed. Now look, we're down 86%. That's absolutely huge. And also closed green, and I just generally quite like the chart pattern. I like it because it's sort of hovering sideways, and I also think it's got a nice run that it can make, and it's got some gaps to fill. Now I don't think it's going to go that high up, especially if the market's crashing, but I think it's pretty stable and there's not as much downside. So Zoom is okay here. You can definitely put a starter position in Zoom, and if it goes down 10-20%, you can maybe put your second position. We do have a bit of chart history below its current price, so you have something to go with too. Let's say low 60s. I don't really zoomed in too much on this before, but yeah, low 60s. I think the amount of news, I don't think news will really impact this too much. Maybe earnings a little bit, but it's been destroyed for so long. I reckon it might even go up on bad news, and that's when, you know, the bottom is kind of in. But, you know, who knows? I don't know what's coming up. This looks like earnings is pretty far away anyway. So yeah, Zoom looks okay. Sideways around here, pretty strong supports. If it goes lower, 60s, that's for your second tranche. I'd never go in one go. So I would go in, let's say, a quarter position here if I really believed in it. Again, I'm not really in the mood because of what I think is going to happen in the market. I can't see Zoom going up a lot if the market's crashing. It'll probably go down. It might even go a little low into the 70s. But I think as soon as the market turns, it'll be right back up here straight away and eventually filling this gap. You know, let's call it 95. It'll probably sell 94.89. Favorite sort of price to sell just before a round number. And as what happens a lot, I usually get these sort of right, and then they really start to run. So I'd probably start getting a bit annoyed that I didn't hold on more. But again, I don't buy in one shot, and I usually don't sell in one shot. So I'd probably be selling. It depends when the run starts, but I'd probably be selling just below this high. Let's call it 84.39 or something. It's probably 84.50, 84.49. I'd sell for this candle here, 6.99 in this case, and then I'd start scaling out for the gap fill. Probably do it. I'd probably zoom in the day it's filling this gap, and if it feels weak, I'd probably sell another one gap fill, and then keep the last sort of tranche just for some lottery shootout up here. Because this should be resistance. But anyway, let's not talk about resistance because it's not going up yet. But Zoom is one of the large caps that I like, definitely. And this is as good a place to buy as any. Peloton, it's the bike company that's sort of had difficulties redesigning itself. I thought that it was quite good, plus 4% on day like today. Also, we bottomed quite visibly here, all the way up, all the way down, and bounced again. You'd expect a flush, especially on a market like this, but no, it didn't. So I think if we start to take out this zone, $11, it could run pretty quick to 13. And then here there's pretty strong resistance, I would say. But again, the more you zoom out, you think, Jesus, look at that. If it starts to move, of course, it could take out 13 and run. So it's just another one of those stocks where it's a credible company, although it's been in the news for really having issues, but you know, it's been translated in stock price destruction. We look at that, that's wild, 94% from the high. It shouldn't really matter what the high is, but it has been destroyed. To me, you know, bad news couldn't really impact this market route. Could, but look at today, it didn't. So Peloton, another one of those good companies, destroyed, way more upside than downside, and therefore a good entry point for one of your tranches. You know, imagine you want to put, let's say, 10K in, just put 2 in right now. Doesn't matter if it goes up 3 or 4, or down 4 or 5%, just bam, in 2000, give it 10 or 20%, probably 20% space until your next entry. Again, based on other market conditions. So Zoom and Peloton are good. Alibaba, it's weaker, but actually, and again, ascending support just like the market. So actually, maybe this shouldn't make the list right here, but it's just Alibaba's a great company. It's been strong around its ascending support. Again, it actually looks too much like the general stock market. So, but you know, you'd expect it to have gone down with the stock market today. It kind of didn't. That's basically flat. The Chinese are always sort of stimulating their economy, giving QE to put a bit of floor to their main stocks like Alibaba. So again, this probably will go down. If the market goes down, this will go down. Actually, I can almost guarantee that. But it's just a good stock, so it's a good entry point here. Because there have been quite a few times where it goes down and you just think, okay, it's going to flush. And then it just reverses and goes up 20% in 1 day, 2 days. So maybe this shouldn't be down here. The other two are probably better, in my opinion, but Baba's a good stock, so that's why it made the cut. DocuSign reminds me a lot like of Zoom, because similar kind of business. It's all online, based on, so it's mainly for corporations, signing documents online. Also destroyed, down 80%. Did make a new low there, but seems to have gapped up. This is probably on news. Yeah, look, that's earnings. So it had good news and then came down with the market. It might even fill the gap, 58, but whatever. 58 is the same as 60 in the grand scheme of things. So another good company destroyed. It has good sort of upside versus downside. And you know, you also have a bit of chart history below, just in case it goes below, you can sort of judge where it goes. I like a bit of that too. I mean, if it takes out the low again, it'll probably fill the gap down at 48 or whatever that is. So it's just one that's good to, it's a good swing trade. You know, it ticks quite a few boxes. I'd probably put that one above Alibaba, actually. Yeah. Virgin Galactic Space Holdings, another wild one. A lot of people think this might go bankrupt, but Richard Branson seems to always make it out. Look at these wild moves, up and down, up and down, up and down. You can make a lot of money on this, but then it just went down and then stayed down. And now we're below any prior price history, so it doesn't tick that box. You know, when it goes down, you can't look back and say, okay, there's support here. I don't like that, but it's a pretty reliable company. I don't think it's going to go bankrupt straight away. It's a good swing trade. It's at its lows, more upside than downside. And if there's any surprising news event, this could really catapult higher. And not just on 1 or 2 days or 1 or 2 weeks, it could really move I don't know if this belongs down here. It might not be as good as some other ones over here, but anyway, I'll rearrange it as I go. It's just a good one for day trade, and especially swing trade. And it closed, not down too much. I think it's something you could put a position in this one tranche, and leave it. And honestly, you'll probably be able to sell it higher, especially down here. It's been absolutely creamed. Look at this, down 90% on its high. Doesn't mean anything. You can go down 90% every day, but this is I've been watching it a lot, so that's why it's down here on the list. TDOC, another one of those sort of Corona stocks, you know, online doctor. Reminds me a bit like DocuSign, a bit like Zoom. It really is the online business. So here again, we're hitting support zones. We haven't gone to new lows. It was green, or at least not red or crushed today. Not as good as the other ones I've covered, I don't think, but still, I think pretty much priced in a lot of bad news, and you've got more upside, and you do also have price history below. So if you enter here and it goes down, honestly, I can't tell where next support is right now. Probably around here, just above 20, which is down, you know, 40% or something from where it is now. But give it some room, like I said with the other ones. But this one's good, I think, at least here for a startup position. But if you're starting in this one, if you're spreading it in DocuSign and Zoom, they will all move the same way. So in the end, if you've got, let's say you're doing it in 2000, now you've got 6,000 in, and if they all move the same way, it's like being in 6,000 in one stock. So just remember which market they're tied to. And again, I don't think they'll go down more. Well, at least they have more upside than downside, but just be wary, you know, if markets start to crash, you can have moments of total liquidation, capitulation, where things that shouldn't go down anymore go down. You know, 10% in 2 hours. I've seen these moves where things that shouldn't go down just get totally liquidated. And then 2 days later you read about which hedge fund just went bankrupt, basically just got closed out. Palantir, this one's good. Actually, this one is better. Even though there's a little less upside because of today's move, it just looks so much stronger. You know, let me just move this around a little bit. But also probably. Yeah, so what do I like about this? It was up strong today. It's also closed above or around the let's call it the local high, and also ventured a little bit above it if you look at that little wick. So it looks like it wants to go higher, and on a really bad day. So this might be the best one so far, just because of how much it looks like it wants to move up. I don't know what the news is. I don't care what the news is. I don't care if there was any news. There might not have been. But this looks like it could move to test 9. Oh yeah, test 9 easily, especially on a move up. Let's say we have tomorrow a sideways move, or which I don't expect. But a day where the market is not going down too much, this could start its run to test 9. It might stop off here 8.4. So if you buy a little bit now, you could sell half of it here, 8.39, the other half there, and then walk away just in case the markets continue to rout. If you believe the market's going to go up, then this would be a great buy, actually. So Palantir is good. ROKU, I think this is a streaming company. I think Netflix, I don't know which one had news. One of them must have had news, but I noticed a lot of the streaming companies went up today, including Paramount, one that I own. I don't particularly like Paramount too much, but I just, it's a position I'm swinging at the moment. I've sold it very well. I bought it okay. I'm just going to try and get out of it overall in profit. So that also was a bit of a sympathy move on, I think it's ROKU. But anyway, ROKU, a bit like the last stock we looked at, Palantir, yeah, move them around. You know, went higher than its last couple of moves up, closed above, best close in a while, and on a bad day, 8%, probably on news. So therefore, a nice move to, let's call it 84. It's probably in the cards, maybe even tomorrow. Because, I mean, again, it's on the list because it's destroyed. So when you're a valid company, you've destroyed 84% and you've got news and you're up on a down market, you could at least expect to move to what I consider to be next resistance and actually just below it to make sure we actually get out. And that's a nice 15% move in 1 or 2 days. Then you've got this descending line. You've also got the latest sort of failure out here. So out. And yeah, definitely it could then break out and really start its move when you were out at the beginning. But you're looking, the way I trade it and the way I trade swing trades is you're looking for 5 to 10%. If you can get out with 15% in a total bear market, which is getting destroyed, that's beautiful. But again, you can always sell half and let the rest run. It's up to you. Different ways of doing it. Just don't get greedy. Netflix has already come off its lows. I think it was a sympathy play to go with Roku, or is it vice versa? I don't know. Closed pretty well, not as well as the last high, but pretty much in line. But it did, however, venture higher. It probably had to come down because the Nasdaq was getting crushed. Next resistance is here, and you can see it also coincides with this candle. This is probably the very bad news day that we all remember. So yeah, resistance is sort of, 248, I would say. If you want to buy it here, 248, it's not the greatest percentage move, and then you're in the gap zone. But to fill this gap, you'd need a lot of power, because this is a hell of a move and it's a big stock. So yeah, I don't see it doing that. That would have to take several days at least, and you'd probably need the Nasdaq to not be going down for that. So Netflix is strong, but I think the other stocks are better for a swing trade. Intel makes the list because it's a very good company. Okay, it hasn't been crushed 80, 90% like the others, but this is Intel Corporation. This is not some little Zoom Peloton bicycle. It's, it makes chips. It's been around for a long time and its market cap is huge. So, but it's been going down, down, down. It took out its March 2020 lows, but that was a long time ago. And anyway, companies like Intel didn't suffer too much from running because they were all sort of online. It doesn't count on people leaving their homes or anything. It's just pure office, entertainment, IT. So yeah, it made the list because it's just been getting crushed. I'm not really sure the reason. I know the CEO has been on CNBC a lot, trying to talk his way out of this disaster, but I think you could start a position here. I do think it will go down more because it closed at the low of day on a bad market, so it will go lower. I would think that 25, just above 25, is good support. Not good support, a good buy. There's not that much support here. It's just the only one that stands out right now, because this is a falling knife. This is different from the other stocks I've been showing. It's just, I think it's a good company. And it's probably, once you buy it, several days later, you probably end up being in the green. Seen it happen a lot. So I don't know if you buy it here now, or because of its bad close and the way the market looks, you could probably get it here. But anyway, I made the list because I'm keeping my eye on it, and it's been destroyed. So almost 6% from its high for Intel. That's quite significant. Now we've got Robinhood, not the best kind of stock for me, because of, it's basically counts on all these millennials, generation X, Y, Z, whatever it's called, the young guys just trading, so they don't have too much money to trade with. It makes up a lot of their consumer base. But anyway, whatever, it's very strong. Here's its ascending support. It has not come down the market. It's closed higher than it has in a long time. It's just how much upside does it have? Could become a bit of a meme stock, actually. Yeah, I don't know. Next 15%, 13, maybe 14, and then it'll probably run for 16. It could probably move. It's just it's already made a decent move, but because it closed so strong today and such a bad market, and because it's been destroyed, it made the list. It hasn't got past history, but we're far from breaking down the lows of $7. So yeah, interesting one, this one. It's not the best out of the list, but it's very strong. And it can move quite fast, this one. So even though you've got sort of 20, 30, 40% for its major resistance, it could do that. It could actually make that move. So, but I think you would need a strong market. So when the market turns, this one should go higher. Definitely should go higher. Again, I think 16 is time to get out. So because by then it's had a big move, and I think there are some fundamental issues with the stock anyway. But I haven't followed it too much. But anyway, that's a good one to look at. Snap went down. It looks like on news recently. Might not be actually, but I don't like gap downs. I think when you fill them, you get out, and we almost filled it today. But the fact that it's up today on a destroyed day is quite impressive. If we take out 13, we start to run and fill this gap. On 15, 15 is good resistance, maybe just above. Yeah, this isn't the kind of stock I would buy. I don't believe in it too much, and it's not the best risk reward. Yeah, I'm not sure about Snap, but it's it'll probably, yeah, if the market goes up, I think it would have a couple of decent days, put it that way. But I would just favor the other ones. Yeah. Meta, Facebook. I wouldn't buy it. A bit like Intel, it closed pretty much at the low of the day, at new lows, totally underperforming the market, and the market doesn't look strong at all. So I think you can buy this pretty quickly at 140 or lower when the market crashes more, which I believe. Basically, you could buy it at the March 2020 lows, but it's a good, and you can see it's ascending support there. It's lost, and that was pretty credible. It hit it many times here, so it's just lost the support, and it's closed low of day. For me, weak. But it's Meta, it's destroyed, and therefore it made the list, but that's why it's high up on the list. I still think it's not the best buy compared to everything underneath. I'd buy Snapchat over it, for example. So, but very interesting for those who want to start long-term positions. I know a lot of people who like Facebook or Meta, and I think you could actually wait this one out for 140 or even lower to start a position, and then you can play the long game, because this will probably be around for a long time with its virtual reality, WhatsApp, and all this Facebook stuff. So yeah, that's an interesting one. Makes the list, definitely. It should be near Intel, actually, because they're very similar, just moving around. And I do consider these two better than Robinhood and Snapchat, just because I'm not happy with the business models. I don't know it well enough. I don't know. I just like to catch falling knives sometimes. NVDA, let me just think about this. Robinhood does have potential though. NVIDIA, this one is also a bit like Intel, a bit like Meta, very good company, but very bad charts. You can have that. You can have some very good companies, very bad charts. You can have very bad companies, very good charts. It happens a lot. But anyway, in this case, we have obviously everyone knows NVIDIA, a bit like AMD, very good chips company. Also sometimes coincides with the crypto prices because it's used so much in crypto mining. But anyway, I'm not really sure why it's been this weak. Doesn't matter. Here it's closed at not at low of day, but you know, it's red. Pretty much low of day. I mean, it's trading in line with the market, but it didn't go down too much today. You consider the Nasdaq was down I forgot what it was, 1.5% or something. So I think it's starting to outperform the market, but it did close red. I think it's at some support zone. Look at this sideways action here for a whole year almost. You know, it's strong. I think if the market goes down, it will go down. It could go down to low 120s or even just below 120. I think this is great support here. Well, not great support, great buy. So, you know, 117, definitely buy some at 117 if it gets there. If you own it, probably worth holding it. If you want to buy it, wait a little bit, try and get a bit greedy. Let's say you want to put, I don't know, 5,000 in, 10,000 in, put half in low 120s, and then the other half wait to see if it breaks 120 and see if you can add the rest at 117-ish. And then wait for the next big move down, and then you can buy it whatever 80 if it gets there. Let's see, it probably never get there because it's a real good company. But yeah, I think it's a hold, but it should go down a bit more with the market. That's what I think of NVDA. PayPal, I think I just went over PayPal. I already traded it, so I'm not really too much into buying it here, all the way up here. There are better buys in the other stocks. If you own it, honestly, I would sell the pops. I would sell moves up. It did not go green today. I think it will go down with the market. I think it will lose a lot of its gains if the market continues to flush, which I think it will. So I'd have a stop, not a real stop, a mental stop. If it loses 90, I'd say, okay, when it moves back up, let me sell it. I wouldn't have a stop loss. I don't do stop losses anymore. I think when you trade a long time, you learn that you have a bunch of institutions out there just hunting for your stop losses, and it usually just comes all the way back. And if you really wanted to stop, you'll probably get a better price if you just wait for that retracement back up. Or if you see it just going down quickly and you think your stop loss is going to get hit, just sell it earlier. But stop losses is not really for me anymore. So yeah, this one, I don't think it's got much upside. I remember the great news pre-market 120, it opened at 100, and for me it's a sell the rallies. In fact, I'd even sell it now. So why is it on this chart? Well, I think it's going to just come back down and then it will be back in play because it's a good company and it's still destroyed. I mean, a lot less than before. It's only 70%, but at the time it was almost 80. So yeah, PayPal. Then DraftKings has already made a big move. Very strong today, very strong recently. I don't really understand why it's not following the market. Maybe it's one of those stocks that's been destroyed so much that it's time to go up. It doesn't care. And I think a lot of these stocks will act like that. That's what I mean by little downside, more upside. You could end up having several green days when the market's crashing. Here you can see that resistance is 21.5-ish. If it takes it out, this one always has a bit of volume. So, you know, it will run. It won't just fake it. It'll probably go to 24 straight away. And then we'll see. Then I think it's a bit overbought. The market will be able to push it back down. So not the one I would buy because it's already made a big move off the low, but it is strong and it'll probably go up, especially if the market stops going down. And I think that's it. This one here, this is the Carnival one. I don't really care or know it much. Let's see. I don't think I can already tell this trend line is very important. Here, it's just had resistance so often at the same area. Let's call it $11. So for me, I wouldn't be buying it here. It's just too much resistance. But okay, if it takes it out, then maybe we get to 14. But this should not be on the list in my opinion, so I'll untick the red. The rest are just not good enough, and I don't think I would be buying more than 20 stocks at one go. So I like to keep it a bit tight. Don't want to spread my focus. So yeah, I don't know how many large caps I just covered there. I hope that was a benefit and you appreciated it. So have a good day. Good luck trading. Yeah, subscribe and comment and all that, of course. All right, thank you.